Hello, good people. This is a CPA do not showing who provide tutorials on advanced financial reporting and financial reporting, and in other areas. That is even the practical part of accounting. That is from the statutory deductions and in the training of other softwares. If you could like to understand more on the practicality of accounting other than the financial reporting and advanced financial reporting, you can be able to reach me so that we can be able to discuss more about the practical part of accounting. So today that was not the topic. My topic today is all about to do International Accounting Standards 33. So this is a topic which is highly tested in every sitting in the advanced financial reporting paper. The paper which is tested by the body called CLASSES, that is under the code of CPA. So when we talk about International Accounting Standards 33, that organizations which are listed, or we call them quoted, supposed to present the basic earnings per share, diluted earnings, for uniformity purposes, according to the standards provided by the International Accounting Standards Board. So when we talk about earnings per share, we are going to talk about basic earnings per share first. Then once we are done with the basic earnings per share, we talk about diluted earnings per share. So let's start with basic earnings per share. So when we talk about the basic earnings per share, so the basic EPS, we always say that basic EPS is all about profit attributable. The profit attributable to ordinary shareholders. Profit attributable to ordinary shareholders. Profit attributable to ordinary shareholders. We divide the weighted average number of ordinary shares. Weighted average number of ordinary shares. Weighted average number of ordinary shares. Or in short, I always say that basic EPS is equals to powers, you divide by 1/0. You divide by 1/0. So starting from the basic earnings per share, and to be more specific about our formula. So we have said that basic earnings per share, it's all about the profit attributable to ordinary shareholders. We divide with the weighted average number of ordinary shares. So when we talk about the profit attributable to ordinary shareholders, remember that we take the reported profit after tax. We start with the reported profit after tax. We deduct the profit attributable to minority shareholders. Then we minus the preference dividends. So the dividends which are attributable to preference shareholders. So that is how you get the first item here. So the profit attributable to ordinary shareholders. Then for the 1/0, the weighted average number of ordinary shares, you always weigh the ordinary shares as per the time factor. So there's something they call issue of shares without a corresponding change in resources. So whereby an entity issues shares, but what it's getting in return is not equivalent to the shares it issued. So this one can happen when there's an aspect of rights issue. We have an aspect of bonus issue, share split and reverse split. So these are the main items which can be included in a equation of EPS. So when there's an aspect of rights issue, remember that these are the shares which have been issued to the existing shareholders at a lower price than the existing market price. So since it's shares which have been issued, obviously when doing your 1/0, you are supposed to use a certain formula which I will be able to write when time comes. So when determining 1/0 and you are provided with the rights issue, you are supposed to use a certain formula which I will provide on the whiteboard on my first question. Then the next thing you need to understand on how to deal with is the aspect of bonus issue. So the bonus issue is all about the shares which are issued at no consideration. So by that is to the existing shareholders. So when an entity issues shares to the existing shareholders at no consideration, that is for free, based on a certain proportion. Again, you need to know how to deal with those shares which are issued through bonus, and specifically they will be affecting your nose. And that one will again be well explained when we do an illustration, of which I've done already even other illustrations. Then you need to understand on how to deal with share split and reverse split, of which share split is all about making the shares to be cheaper. So this is whereby if the par value was 10, we reduce it to 5 so that we attract investors. So the main objective is all about to make the shares cheaper. So for the reverse split is all about the share consolidation. So the share consolidation is all about making our shares to be expensive so that we avoid the dilution effect. So those are the areas you need to understand. So I will be able to cover all the areas on my videos I will be doing one by one, of which today I will do a question whereby we have the aspect of rights issue. The next I will be able to do a question where we have a bonus issue. The next share split, and finally reverse split. But for the share split and reverse split, you will find that I will do a question whereby they have combined the share split and rights issue. And again, I do a question whereby there's a combination of a bonus issue and reverse split. So those are the main things which can be incorporated in a question, because the other work is just direct. The other work whereby you find that the issue shares, then you are supposed to find the one-knows. You just weigh the shares as per the time factor. That is from the time of issue to the end of the year. So for today's session, I would like to do a question which was tested in the last sitting. That is April 2022 Advanced Financial Reporting and Analysis paper under the CPA course. So that is a question of earnings per share. So this question says this. So this is question 3. Question 3. They are saying that R Limited, a public traded company, had 9 million ordinary shares of shillings 1 per value and 1 million 7% redeemable preference shares of 10 per value, each on 1st October 2020. As at that date, R Limited also had in issue 2.5 million stock options. These stock options, that is, these options are exercisable at shillings 1.5 per share. The average fair value per ordinary shares during the year ended 30th September 2021 was shillings 2. So you can see there is a stock option there. Then R Limited's profit for the year to 30th September 2020 from continuing operations is 14,575,000, of which in brackets you are provided another profit there for 30th September 2020 of 15,100,000. The following transactions took place during the year ended 30th September 2021. Number 1, you are told on 1st January 2021, the company issued 1.8 ordinary shares in a 1-for-5 rights issue at the price of shillings 2, when the market price per share on CAM rights basis was shillings 5. Number 2, on 1st April 2021, R Limited issued 1 million ordinary shares at their full market value. Number 3, on 1st July 2021, the company issued a shillings 5 million convertible bond with an effective interest rate of 12%. The bond is convertible into ordinary shares at holders' option on the basis of 60 shares per shillings 100 bond. None of the bond was converted during the year ended 30th September 2021. The income tax rate applicable to R Limited is 30%. So as a student, you are required to do the basic earnings per share, restated earnings per share, and you are required to do the diluted earnings per share. So for the basic is the one for 2021 they need. So 30th September 2021. For the restated earnings per share, they need that one of 30th September 2020, which is a previous year. Then for the diluted earnings per share, they need the one for 30th September 2021. So let us start from the basic earnings per share. Let us start from the basic earnings per share, of which we have the formulas. So the first thing I have to determine is the PAUs. The first thing is the PAUs, which we said that for you to determine the PAUs, we start from the reported profit after tax. We start from the reported profit after tax. Then we raise the profit attributable to NCI, profit attributable to NCI. Then I'm supposed to raise the dividends to preference shareholders. So the preference dividends. So looking at my question here, the question 3, April 2022, Advanced Financial Reporting and Analysis, question 3C. They said that our limited profit for the year to 30th September 2021 from continuing operations was 14,575. 14,575. Profit attributable to the NCI was not provided. For the preference dividends, we have redeemable. We have redeemable preference shares of shillings 10 per value. So it was all about 1,007,000 redeemable preference shares of shillings 10 per value on 1st October 2020. Remember, 1st October 2020 is when our financial year is starting, because the financial year is ending 30th September 2021. So which means that we have 7%. So to get the dividends, we have to use that rate, 7% of the 1 million. So I will say shillings here in thousands. So the shares which are given there is 1,000 shares. But remember, to get dividends, you cannot multiply with the number of shares, but the value in shillings. So that is why I have to multiply with shillings 10. So that is why I have to multiply with shillings 10. So using my calculator, I will be able to say 0.07 times 1,000 times 10 times 10. So that is 700. So that is 700. So this is 700. So I will be able to minus that 700 from, so 700, so 14,575 minus 700. So this is 13,875. So that is our PAUs. So for the one-offs, remember that I said in this relevant year, the year ending 30th September 2021, starting which year? Starting 1st October 2020, there was a right issue. So the right issue was on note 1, 1st January 2021. 1st January 2021. So 1st January 2021. So since there's an aspect of a right issue, we have to use the formula. So the formula is, so when determining the one-offs, you say ordinary shares, ordinary shares before right issue, times the fair value. You multiply the fair value before right issue, you divide by the theoretical ex-right price, you multiply the period before right issue, the period before the right issue, you add the ordinary shares after right issue, you multiply the period, after right issue, after the right issue. So that is the formula I'm supposed to use. So in order to apply that formula, I have to do the analysis of shares. I have to do the analysis of shares. The analysis of shares, which will be applicable in the formula. So we have the date, we have the details, and here we have the shares. We have the shares. Date, remember our financial year starts on 1st October 2020. So the balance brought down. Remember at the start of that question, you were told that there was 9 million. There was 9 million shares which were issued. 9 million shares were issued. Because they said at the start of the question that R Limited, a publicly traded company, had 9 million ordinary shares. 9 million ordinary shares. So that is the one we start with. So I'm saying in terms of thousands, that is why I've reduced that. Moving to additional information, number 1, that is where we have shares which were issued through the rights issue, which is 1st January 2020. So we have a rights issue. We have a rights issue. So there was 1,800 shares which were issued there because they said on 1st January 2021, the company issued 1.8 million ordinary shares in a 1-for-5 rights issue at a price of 2, when the market price per share on CAM rights basis was shillings 5. That is fine. Then note 2 is another area whereby we have ordinary shares which are issued. On 1st April 2021, R Limited issued 1 million ordinary shares at full market price. So 1st April 2021. So new issue. We have new issue. So that is 1,000. Then note 3, they said that on 1st July 2021, the company issued 5 million convertible bonds with an effective interest rate of 12%. The bond is convertible into ordinary shares at the holder's option on the basis of 60 shares per shillings 100 bond. None of the bonds was converted during the year that started September 2021. Remember that when we talk about basic earnings per share, and specifically we are doing the weighted average number of ordinary shares, there were no's. We always use the ordinary shares. We always use the ordinary shares. So we don't use the convertible bonds. So we can only use the convertible bonds if they have been specifically converted to ordinary shares. So on this note 3, there was convertible bond. They gave us the proportion of conversion, but they never converted that bond. So that convertible bond will be used when doing the diluted earnings per share. Because when doing the diluted earnings per share is when we use the potential securities, the ones which are likely or unlikely to be converted to ordinary shares. The securities which bear the word convertible, including stock options or share warrants. The one again I never used at the second paragraph of the start of this question. So up to this point, I can be able to apply these shares which I have analyzed in this formula here. So ordinary shares before the rights issue is this one, 9 million. So I can say we have 9,000 times the fair value. So you go to the statement whereby you were given this rights issue. Remember that they said in note 1 that they were issuing the rights issue at shillings 2. But remember the market price was 5. So that is the fair value. Then theoretical exercise price is another thing to determine the theoretical exercise price. So TRP. So when computing the theoretical exercise price, we use the proportion at which the rights issue was made, and at the same time considering the exercise price and the market price. So remember that as per note 1, the rights issue was made at 1-for-5. 1-for-5. So 1-for-5. So which means that they were issuing one share, the one new share at 2 shillings. But remember the 5 were going at shillings 5, which is the fair value. So 1 times 2 is 2. 5 times 5 is 25. So we add this and this. So adding 1 plus 5, that is 6. 2 plus 25, that is 27. So 27 divided by 6, that is 4.5. So 4.5 is my theoretical exercise price. Then period before the rights issue. Remember that our financial year starts on 1st October 2020. The rights issue took place on January. So from October to January, that is October, November, December. So this is 3 months. So before, so the period before, 3 over 12, plus ordinary shares after the rights issue is the one which are the shares which were issued before the rights issue, or the shares which were there before the rights issue, we add with the shares through the rights issue. The shares through the rights issue is 1,800. So up to this point, we have 10,800. So these are the shares, ordinary shares after the rights issue, 10,800. Then the period after the rights issue is from January to September. So that is 9 months, 9 months. So 9 over 12. So you can see there is shares which were issued in that year which have not affected our formula. But obviously they have to affect one nose. So even if they have not affected our formula. So what am I supposed to do? What am I supposed to do? I will weigh them from the time they were issued. So the answer I will get there, I will be able to add with their 1,000 shares which are weighed. So we weigh from April. So from April to the end of the year, from April to the end of the year, which started September 2021, those are 6 months. Those are 6 months. So we multiply with 6 out of 12. So they have to affect one nose. So these shares, they have to affect one nose. So doing that, I can be able now to get the total. I can be able to get the total. So times 5 over, you divide by 4.5 times 3 over 12 plus 10,800 times 9 over 12 times 9 over 12. So this one is giving me 10,600 and this is 500 because this is like half, 1,000 divided by 2. So 10,600 plus 500, that is 11,100. That is 11,100. So this is our one nose. This is our weighted average number of ordinary shares. So that I would take my powers, the profit attributable to ordinary shares, the profit attributable to ordinary shareholders, we divide the weighted average number of ordinary shares. So we take 13. So basic EPS is all about 13,875. We divide with 11,100. We divide with 11,100. So you divide 11,100. So this is shillings 1.25 per share. Per share. So that is the earnings per share. So, and that is the first requirement, and that is how you are supposed to compute for the basic earnings per share. So that is 4 marks. So the next requirement was on how to do the restated earnings per share, and finally we do the diluted earnings per share. We do the diluted earnings per share. And that one will be done in my second session, in my second video. So for now, these are the sessions we'll be doing from time to time. This is how we do the online classes. So it's a new platform which we'll be doing classes during the evening hours. That is at 8 p.m. to 10 p.m. whereby we provide exclusive revision on the advanced financial reporting, and I said other than the CPA units, Remember that we cover even the other units other than the FR and financial reporting. I always share in my channel. We cover other units like quantitative analysis, management accounting. And at the same time, we do the practical part of accounting, the accounting packages. We teach on the statutory deductions, on how to do the returns from the VAT, that is a value-added tax, pay, rental income. So as an accountant, remember these are the areas you need to be good at. So you can be able to reach me through my contact, 0728 760 546, or in my social platforms using my name, CPA Do Not Show, so that we can be able to discuss more.